Just about everyone knows that charitable contributions are tax deductible. Millions of Americans give to charity by giving cash and non-cash items, as well as volunteering their time. In this video, we're going to take a deeper dive into what constitutes a charitable deduction and how they're properly reported on your tax return. I'm the Tax Geek, back with more of your taxes, oversimplified. First of all, let's look at the types of organizations you can make deductible contributions to. Not-for-profit organizations are recognized by the IRS under Section 501(c) of the Internal Revenue Code, which allows these organizations to accept donations and not treat them as taxable income. I'm sure that you've heard of 501(c)(3) organizations, which are the most common type of nonprofit organizations. These can include churches, service organizations such as the Red Cross and March of Dimes, not-for-profit schools, colleges and universities, public television and radio stations, public and private foundations, and certain fraternal and community service organizations. Organizations that do not fall into this category include political campaigns, member-owned cooperatives such as credit unions and utility membership cooperatives, homeowners associations, and crowdfunding contributions to platforms such as Indiegogo, GoFundMe, and Patreon. Any contribution must be made for the benefit of the organization as a whole and may not be for the benefit of a specific person or persons. And any payments made directly to a nonprofit organization for a product or service they provide is not considered a deductible contribution. Example: Millie and Edna are members of the community church and during the year gave $1,300 during weekly services. They also send their daughter Elisa to a K-12 school the church operates at an annual tuition of $7,250. Only the contributions to the church constitute a deductible contribution. The school tuition doesn't. Now that we've looked at what types of organizations you can make deductible contributions to, let's take a look at what types of contributions you can make. Whenever you give cash or non-monetary items of value to a nonprofit organization, that gift is considered to be a charitable contribution that can potentially be deducted. Of course, the first thing that comes to mind is giving cash. For most cash contributions to be deductible, they have to be acknowledged by the organization, which most organizations will be more than happy to do. If you give by credit card, the contribution is considered to be made when the card is charged, regardless of when the bill is paid. Next, the deductible part of the contribution must be reduced by the fair market value of any items of value the contributor receives. In this example, Alan gives $500 to his local public television station. In response, the station sends him a DVD set of The Best of Lawrence Welk, valued at $49.95. As a result, Alan is only able to deduct $450 of his donation. This rule does not count for items of minimal value, such as tote bags, pens, etc., especially if they're imprinted with the organization's name. When it comes to taking a deduction for donating items that are not cash, it gets a little more complicated. For most items, you can deduct the fair market value of any non-cash item you give to a nonprofit organization as defined earlier. Defining fair market value can be a little tricky, but for most household items and clothing, the value should be yard sale or thrift store value, which, for most items, is approximately 10 to 20% of the original retail price. There are a number of online tools you can use to determine the fair market value of common clothing and household items, and I've linked to a couple of them in the description. The key is proper documentation. Make a list of everything you donate and the fair market value of each item. If the return is audited, the IRS requires this for all non-cash contributions, regardless of size. If the total value of all non-cash contributions exceed $500 in any given year, you must file Form 8283, giving much more detail on where you made the contributions, what items you gave, and the date you contributed them, when and how you acquired the items, and their original purchase prices. You must also give their fair market value as of the date of donation and how you determined that value. For truly large donations of items worth over $5,000, the IRS may require an independent appraisal or a Form 1098-C from the organization to be sent with the tax return. Unlike other documentation which is just kept in case the return is audited, this documentation must be sent with a mailed-in tax return or attached as a PDF to an e-filed return. Making donations of appreciated property, such as artwork, collectibles, or real estate, is a more complicated topic that will get its own video. You can also deduct any out-of-pocket expenses you have as the result of volunteering for a charitable organization. If you use your own vehicle and drive for the charity, you can deduct the mileage driven at 14 cents per mile. To learn what is involved in deducting mileage, click the card above or the link in the description. And this is important. The value of your time is never deductible, only your out-of-pocket expenses. Example: Janice is a professional photographer who generally charges $65 per hour for her services. She volunteers at a local animal rescue organization taking pictures of pets up for adoption. She cannot take a deduction for the value of her time spent taking these pictures. So how do you report charitable contributions on your tax return? If you otherwise have enough other deductible expenses to benefit from itemizing, the totals are entered on Schedule A, separated by cash and non-cash contributions. And as I said earlier, if you have non-cash contributions in excess of $500, you must file Form 8283 and provide more detail on the contributions. And that's the oversimplified rundown on deducting charitable contributions. If you need additional information, especially when it comes to making large non-cash contributions, you'll find links in the video description. If you found this video informative, go ahead and give it a thumbs up and share it with anyone who would find it useful. Please subscribe if you want more oversimplifications of our complex tax system. And, of course, your questions, comments, and suggestions are always welcome in the comment space below. Thanks for watching, and I'll be back soon with more of your taxes oversimplified.